Good evening, everyone, and welcome to Admiral Markets webinar of 24 of September 2014. And today we are going to talk about the most important factors in fundamental analysis. So this webinar will show you what factors you should consider when you want to take into account fundamental analysis. As always, before we begin, our standard risk disclaimer. But before I begin, I see a comment, dollar yen. Hello, Nenad. Great, thanks for the dollar yen ODI setups. Worked well for me. Well, I'm very glad that my setups worked fine for you. Excellent. Well, that is basically what I do each Monday. For all of you who don't know, each Monday on Admiral Markets Live session recaps. So today, this is also important aspect today, what we're going to talk about. So just pay attention. I won't bother you with unnecessary details. So we will be concentrating more on those important factors which you should consider than on to, I don't know, trading currency pairs and characteristics of currency pairs. So this is very, very important for you to know, because if you don't know what fundamental reasons you should consider, then you may be in a sort of peril, because these factors will decide, even on intraday basis, there are a lot of factors that really move the market. So you always need to pay attention to those kind of things, those kind of factors, because if you don't do it, the things and odds are that eventually you can lose because of not taking that into account. So let's see first the disclaimer. Online educational materials are available by Admiral Markets as Estonia for a global audience. Therefore, please take into consideration that information in this session may not be suitable for everyone. To get a corresponding information on charting conditions in any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. There is disclosure statement stating all possible risks associated with Forex market. By accepting the risk, you're also proceeding further with me. Just take, if you want, a quick pause on the screen to see the risk disclaimer, and then I can continue to move on. Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents the personal opinion of the author. It's me in this case, and in no way it represents the actual suggestion for the trade. These are not MUK's opinions, so the website in the video is not .uk website, but the globalnews.com website. Forex is risky business, and this is a personal opinion only. This webinar is informational and educational purposes only. So with having said that, we are ready to proceed. So what is fundamental analysis? What are the subjects of analysis? Then we will see what are the main players in Forex market. Then what are the important factors which you should always consider when trading? And of course, calendar key releases. Calendar key releases. I will show you, of course, what calendar releases you should pay attention to when you're trading. And as I said, this is pretty straightforward. You don't need to be any, I can say, economical expert or expert for economy or global economy. These are things which I try to keep it as simple as possible. So I will give you cues. I will give you the facts which you should pay attention to. And I won't be delving deeply into it, because most of you guys are trading each day. You're intraday traders. And you're not interested in what will happen in 3, 5, 6, 1, I don't know, in a year. You're interested in what will happen today and possibly what can happen tomorrow, or maybe what will be the day after tomorrow, this week. So these fundamental reasons are only for your consideration to take into account when trading, not to rely on that 100%, because things change, and you know that things change. But this can serve as guidance, of course, to your trading. So these things can serve as guidance to the way you're trading. So what is fundamental analysis? Fundamental analysis is the analysis of the overall state of the economy, interest rates, production, earnings, and management. So that is the definition of fundamental analysis. Fundamental analysis maintains, and it says to us, that markets may misprice a price in the short run, but that the correct price will eventually be reached. So profits can be made by purchasing the misplaced price and then waiting for the market to recognize its mistake and price to, let's say, reprice the exchange rate of the pair. So the price can reprice itself. So what does it mean? Usually when you're waiting for some setup, the price will go either in a retracement or maybe in a breakout or whatever style you want to trade. Then when those news hit the market, the thing is the price can misprice itself, going deeply down, much deeper than you initially wanted by technical analysis. But then market usually recognize that the price has dealt too deep and has fallen too deep into the market, and then the price eventually corrects itself in the trend direction. So that is what can happen usually, and what might happen usually during the course of your trading day. So because of that, you always need to pay attention for fundamental reasoning behind your analysis and your trading. Now, Kiran is asking me, is this session going to cover binary options? No, Kiran, the thing is, Admiral Markets does not offer binary options, so I'm not allowed to talk about binary options. If that was a service of Admiral Markets, I can talk about it because I know what binary options are. However, I don't recommend you to trade it, but I know what those are, but because Admiral Markets does not cover those kind of options, we cannot talk about it today. Okay? So let's talk about what we can, of course. So we say that the thing is, fundamental analysis before that tends to have a broader impact on the market than technical analysis. That is a sure thing, because fundamental analysis usually brings you more detail than initially technical analysis does. So the thing is, those details have to usually cover broad and huge currency pairs. So we don't talk just about dollar, euro, and so on. We are talking about yen pairs, Swissy pairs, other pairs. The perfect thing is that when market is in equilibrium. For me, that is the perfect thing. When market is in equilibrium. Usually what that means when market is in equilibrium means that fundamental analysis and technical analysis are usually are aligned. And that is a great thing, because when the analysis are aligned, then we usually have a very safe trade. And when that happens, I really like when that happens, because usually then I'm sure that my trades will be in profit. Okay, so those are just great things when do they happen. But unfortunately, market is not perfect, and sometimes and very often, fundamental analysis just does not go along with technical analysis. And because of that, because of those misalignment, we tend from time to time to lose the money to Forex, just because we didn't align any of those fundamental aspects along with technical aspects. Mostly, guys, when you trade, you're trading usually each day, right? So you're not interested in long-term predictions, because I don't know what can happen. Maybe I wouldn't like that to happen, but earthquakes, those kind of nasty things, can really kill our trading day, and because of that we don't want to know what will happen in 1 or 2 months. Now, if you're particularly interested in long-term investment and long-term trading, then you might be interested in what can happen. But the thing is, most of us are really not trading more than, I don't know, 1 to 3 days. Usually, the longest I held into trade is 2 days, maybe 2 full sessions, but they're also on rare occasions. So you see, when you're trading with technical analysis, the most important thing is that day fundamental analysis, because those fundamentals can change and might change, and you want to go with it. You need to go with the flow. So basically, if today is important decision for example, I don't know, for dollar, maybe we will stay out of the trade until tomorrow, until things sell up. So the thing is, the time when we usually make good profits is when technical analysis is in agreement with fundamental aspects. Now, let's talk a little bit about those reasons behind the fundamental analysis. So the matter of analysis or security prices using such fundamental factors are political factors, interest rates, and social economic factors. Political factors which happen each day all over the world, then interest rates which might happen, and corrections of those interest rates. For example, interest rate decisions. Those are very important aspects for each currency. Interest hike, let's say, is good for that currency, or when banks decrease interest rates, that usually is subject to a bearish market. So we tend to use those interest rates usually in the long run, but for our technical analysis it's not so important. I need to stress that, because I know that some traders have been telling you that you should try to take technical analysis only as I don't know, intimidating factor when you trade, but that obviously is not the case the way how I teach it. You know that already, because the thing is, I'm successful with technical analysis, and I just am not interested whether the interest rate, I'm interested for that particular day, but in the long run, for example, tomorrow, I'm not interested, because I will be trading the charts. I will be trading what I see. I will be trading either long or short. I'm not interested. I will be trading maybe Aussie. I will be trading yen, Swiss yen, Euro caddy. So I'm not particularly interested what might happen. I'm more interested in what technical analysis is telling me. But for all of you who want to trade more, let's say more like in investment, so you want to trade each day, but let's say you want to hold your trades for more than 1 week, 2 weeks, or maybe month, or even a year, then these kind of things, of course, will and might help you. Might help you a lot indeed. So you need to be wary about what actually you want to trade, guys. What type of trader you are. That is what we were talking about, if you remember. So what type of trader are you? You need to know what type of trader are you. So it's just not for every type of trader, guys. It isn't going like that. Okay. So please always have that in your minds when you want to trade, whether you will be a long distance runner but trading maybe each day, or you want to be long distance runner trading each month. In that case, for the second option, of course, it's most obvious that you need to know a lot about these things. So it helps you to identify conditions for breaking the existing trend. It helps you to understand the cause of what is happening in the markets, and it's widely used for long-term forecasting. That is also very important. The policy of central banks, namely ECB, Fed, BOE, BOJ, RBA, BOC, is very important because the policy of central banks determine the exchange rate of that currency pair, which will in turn determine the movement of that particular pair versus other pairs. We also use macroeconomic data. We need to use economic calendar, and finally, at the last part of this webinar, I will show you which news are most important for dollar, cable, and euro. So economic calendar is considered macroeconomic data, and you should pay attention to each day. Then inter-market analysis, that means interconnection of markets, of various markets, worldwide markets, and other carry trade, sovereign crisis, etc. So sovereign crisis can be really, really important because sovereign crisis can really mess up with not just with our trading, with global trading. You remember Ukraine crisis and what dollar ruble, where dollar ruble went when that crisis started. So always pays attention to those kind of things. The essence of monetary policy also very important. We have quantitative easing. Quantitative easing is something which we occasionally see during the long-term refinancing options, or that USA did that for 3 years. And quantitative easing are just, it needs to strengthen the currency. It needs to bring up the financial stability in one country's policy. Then we have statement minutes and CB meeting protocols. So now I'm talking you generally, but you should be paying attention. I won't be deeply going into it because it's not important for you to know now the terms or those definitions. What is quantitative easing? What is statement? What is Fed minutes and so on. So always pay attention to when you see some news where you see statement. Let's say ECB. President is testifying, or ECB statement, or Fed meeting minutes. Those kind of things are very volatile, and those kind of things may move the market really can move a market. So you always need to pay attention to those kind of things. If you don't do that, the odds are that you might lose, guys, for that particular day. You might lose for that particular day, and the thing is, it's a spike, a volatility. Usually when you see statement, ECB statement, Fed meeting minutes, whatever, the price may have a trend during the day and then bang, it can shoot up or it can shoot down. But eventually, when traders digest the news, the price will correct itself. So we can talk about news spikes. Usually during those statement days and minute days, during the release, when those things are happening, the price goes wild. That is why I'm always telling you guys, pay attention today. Don't trade for that particular day, or be very careful. You need to pay attention to that. Central banks, of course, are very important because banking systems are maybe the most important things in one's economy. When banks are doing good, and usually the people do live good. So basically, banking system needs to be in the place. Now I can say this is the part of fundamental analysis. So banking system needs to stay in the flow with the current state of things, which we always hope to be positive for, let's say, our monetary system to be very stable. Refinancing rate is the rate at which central bank finances commercial banks. As you know, the top banks, the head of all banks is central bank. Central bank exist in each state. So we have central banks existing in each state. The main function of banking system is to supply the economy with money, guys. So you know that that is the main function, to supply the economy with money. Okay. The thing is, those central banks really, they do supply and finance commercial banks. So this is the top of the pyramid. Central banks give the money to commercial banks, which do sorry, indeed, they raise one land's or one sovereign's economy. So the thing is, when we have central banks bid rate days, now important thing is bid rate days. Pay attention to that. That will bring volatility to the market. Usually, you know, when you see bid rate date for euro, that means that there will be probably interest rate decision. And that particular day, it's best, guys, to stay out of the trade, because we just don't know what might happen, what can happen. And the thing is, the best thing is always to be very calm and to stay calm, because we don't know what will happen. There will be more days to trade. So guys, do not trade on bid rate days or decision rate days. So the thing is, when those things happen, everything can happen. So you're not sure whether the price will respect your orders or it might go against you. So always, always, always pay attention to that, especially if you're trading in contrary of trend direction. Next slide, I will show you what are the main players in Forex market. So countries which are borrowing the money and issuing bonds, central banks, companies, foreign exchange fixing, speculants, investment management firms, non-bank foreign exchange companies, and money transfer remittance companies and bureau de change, or bureau de change, because it's in French. And the thing is, money transfer remittance companies, those refer to Western Union, those payment options, which do exist in each country. So as I told you, as I was telling you about the exchange rate, now the thing is, we need to know what determines exchange rate, because as I said, when those things happen, the price may get volatile. And when those things are happening, the best is to stay out of the trades. Okay? So stay out of the trades when those things are happening. Economic policy, government budget deficits or surpluses, balance of trade levels and trends, inflation levels and trends, economic growth and health, political conditions, and market psychology. Those are the things which determine exchange rate. So these things do determine the exchange rate. Economic policy of one's land, country, balance of trade levels and trends, inflation levels. So all those data which we are seeing each day on our economic calendar determine basically the exchange rate. So when we say we will have an interest rate decision, that is when we are referring to basically those kind of things mixed up together, and basically upon all of these things we have interest rate decisions. The essence of monetary policy also, these are two important things. When there is a recession in the economy, central banks are decreasing the interest rates while pumping the economy with money in order to stimulate business activity and prevent the development of deflation processes. Now these are economic things. You need to know about that. Usually, as I said, decrease of interest rate is looked as a negative in Forex market. And you probably remember last decision was to basically decrease the interest rate, and euro fell significantly after that. And that is negative. Why? Because those banks, central banks, are pumping economy with money in order to stimulate business activity and prevent deflation. But that happens in a recession in the economy, not in a positive outgrowth, only in recession. When the economy is on the rise, there is an overheating risk or the risk of serious inflation growth, and the central bank starts to increase interest rates in order to halt the business activity and rise in inflation. But that is looked as a positive. So when you see that basically central banks start to increase interest rates, there is interest rate hike and traders look positive to that. Okay? Because the economy is on the rise. Now pay attention, guys. I know that maybe this is a bit different for you today, but you need to know about these things. You need to know about all these things if you want to be successful. So, recession and rise of the economy. When there is recession, rate will go down and that is negative. When the economy is on the rise, there will be interest rate raise or hike because they want to avoid the risk of inflation growth, but that means that the economy is on the rise. It's going in the positive direction. Now that explains what happens when those things start to overwhelm our economic calendar. And this is the answer to your questions, guys. Now decrease of interest rate. Now decreasing interest rates, as I said, is bad for one's economy. It's in the long run, it's good. But for that particular moment, it is looked as bad. It will make loans cheaper, mortgage, consumer loan, and the result, it stimulates consumptions and business activity in the economy, okay? It will result in a fall of interest rates on deposits and bonds. It will spur growth on the domestic stock market. It will result in increased inflation in the economy, may result in bubble formation or double dip, and has a negative effect on the domestic currency. Decrease of interest rates. Now this is important. Again, I'm telling you, pay attention to last decrease of interest rates in euro. It has a negative effect on domestic currency. That is the point. Increase of interest rate, in the contrary, it's called monetary policy tightening. Now Forex words, now professional Forex terms, monetary policy tightening. It results in a higher cost for loans that limits business activity in the economy. It results in a rise of interest rates on deposits and bonds. It puts pressure on the domestic stock market. It results also in decreased inflation in the economy. And it has a positive effect on the domestic currency, guys. A positive effect on domestic currency, which is very, very important if you're concerned in a long-term trading. Now, hints and rumors. They're very also influential on Forex market. Okay? One quick answer. Kiran is saying, if I'm not wrong, cable means GBP dollar. Yes, Kiran, cable is GBP dollar. Yeah. So any hints, rumors, announcements of the leaders, chairman, important macroeconomic data, or possible tightening, we talk about it, tightening of monetary policy, will have supportive effect on the currency. So pay attention to this. Monetary policy tightening is connected to increase of interest rates, and any hints for that will bring the uptrend for that particular day on that currency pair. For example, if we have any hint about macroeconomic monetary policy tightening on GBP dollar may be in a downtrend, but once traders and big investment hedge funds hear about any hint, they can put a lot of money, thus raising GBP and changing the overall trend from negative to positive, or from bearish to bullish. So that can happen in one single hour, guys. A single hour is enough for that to happen. Any hints or signals about finishing a cycle of rate increase may have a negative effect on domestic currency. So also a hint about finishing a cycle of rate increase may have a negative effect. So even though it can happen if, let's say, projected bid rate is 0.25 and today is 0.25, and if it happens to be 0.25 on a decision, it can have a negative effect, not positive effect, because the only positive effect is about, as I said, a monetary policy tightening. So that is the only positive effect for these kind of things. Buy rumors, sell facts. Usually rumors are bought, facts are sold. When we hear a rumor, it can be a hint. As I said, GBP dollar can go up. But then, if that rumor is neglected by a Bank of England chairman, usually it will result in a straightaway sell. So that is the always thing. Buy the rumor, sell the fact. Also, US quantitative easing. What does it mean? It's purchasing of the securities on the central bank balance sheet. So by buying or selling financial securities, the central bank may increase or decrease the supply of money in the system. The thing is, and the point is, that traditional quantitative easing may revive the economy and the banking lending while causing a decrease in the domestic currency and an increase in demand for stocks and commodities, guys. So quantitative easing usually have a positive effect in the long run for the economy. And that was happening in the US. Macroeconomic data. Good data brings the beginning or a continuation of an interest rate increase cycle. If we have a good data upbringing each month, that can be a continuation or beginning of an interest rate increase. That can, guys, happen with GBP dollar because we had great news, I can say great economical data about GBP that we just need to hear of an interest rate increase, and GBP dollar will spike. It will spike up, I think, maybe to 1.700 levels. Just one hint is needed. If that happens, GBP dollar will rise, and it might happen because Great Britain's economy is in a rise mode. It's bullish. The overall economy is bullish. So in case the central banks makes it clear that it's prone to tightening on monetary policy, good macroeconomic data raises the risk appetite. And raising of the risk appetite can bring dollar. It will be positive for Standard & Poor's index or WTI, but it can bring dollar down. Okay? Then we need to use the prevailing trend of the market and, of course, as I said, economic calendar, guys. Always, always, always economic calendar for that particular day. Now, this is what is important for you to look at. ISM manufacturing, ISM services, Chicago PMI, Field Fed Index, New York Empire State Index. 50 means it's a psychological level, above that positive, below that negative. And some indexes of those, new orders, price paid, and employment. These are important things. Then, concerning labor market, non-farm payrolls or non-farm private payrolls, unemployment rate, average work week, hourly earnings, initial claims, ADP employment report. You can find all of those things in the economic calendar. All of those things which I'm mentioning now. Then about inflation and housing, CPI, core CPI, PPI, and core PPI. Then we have target level for those. If the target level is exceeded, then of course this is a positive for the currency. Housing starts, building permits, new home sales, existing home sales. Standard & Poor's Case Shiller Index, a National Association of Home Builders Index or NAHB Index. Now, what are key releases? Interest rate decisions, NFP, FOM decisions, FOMC, inflation, unemployment. All those things which I have mentioned before this are key releases. So pay attention to those. Those are key releases. Stress tests, which are not being held very often, but that can be held. So stress tests, inflation, unemployment, industrial production, business sentiment surveys, consumer confidence surveys, trade balance, manufacturing sector surveys. You can find all those important as red in Forex calendar, even stress test when it happens. So this is, guys, the calendar, and these are the most important news release data for euro. So minimum bid rate, look at this, 0.25, 0.50, 0.50. This is interest rate decrease. So when these things happen, euro initially fall down for maybe 100 pips, and then it continues to fall down until the next important data release. So usually that begins the start of a downtrend on maybe weekly level. Then ECB press conference, which tends to be very volatile. German's EU economic sentiment, which has very important spike data during the London session. German flash manufacturing PMI, when the president of European Central Bank is speaking, and German IFO business climate. So those are the most important release news for euro. For dollar, we have much more releases. FOMC member speaking, ISM manufacturing PMI, advanced GDP, unemployment claims, NFP, unemployment rate, University of Michigan consumer sentiment, core CPI, core retail sales, trade balance, Philly Fed manufacturing index, FOMC meeting minutes, and ADP non-farm employment change. Those are the most important news release data for a dollar, guys, okay, for a dollar currency pair. For pound, we have claim and count change, MPC asset purchase facility votes, official bank rate votes, unemployment claims, average earnings, services PMI, manufacturing production, and CPI. But above all, guys, minimum bid rate or bid rate announcements are very, very important. So always pay attention to that prior to all those releases. This is far the most important data release which can happen during the month. Now, as I already told you, I didn't want to be boring about these fundamental data releases, so I tried to be very concise and very precise about those things. So if you have any questions, you can ask me now. These are the things which you need to pay attention to. And we got a little bit about those. We got into economics today. And as you can see, economics is important. I wanted to tell you especially about increasing interest rates and decreasing interest rates, because this is what many traders just cannot comprehend, why it's so important when interest rates are decreased and decreased, and what is recession and what is the positive rise of the economy. So these things you need to know these things if you want to be serious Forex trader. And of course, I always need to mention that, let me pause the screen for a brief moment. Of course, our session recaps, so sign up for new analysis. Euro OD, initially we had 2 spikes for 15 pips. We will see if this level will hold. Each day, new analysis, and of course, our educational webinars. And you can see the calendar even if you use Admiral Market Supreme. You can have it on your platform, but you also have that economic calendar also in Admiral Market's website. But I usually use also Forex Factory calendar. Forex Factory, I've been using it really very extensively. I think I have a knack for that. But I think also there was a calendar on, I think I need to see under that, there is a calendar. I think if you can browse the site, you can see the calendar. Also on Admiral Markets website. Let's see what it will give us now. But always pay attention to calendar. If you're not sure where to find it, as I said, easier it's on Forex Factory. I personally use that. But also from time to time I do pay attention to this. You can see it here, Forex calendar. It's under the analytics. Okay, yeah, here, Forex calendar. Okay, and you can compare it to also Forex Factory. Also, forgot to say, I will be publishing new premium webinar soon, and you will see I will always, as always, give you nice presents on premium webinars, so pay attention and sign up for that. And the thing is, sign up for all those good things which you can afford because it's free, especially, as I said, Pro Learning Lab, me and Chris, and weekly Forex recap. I prefer those the most. Always, every Monday, free pips. So guys, if you don't have any further questions, we can say that everything is clear. And I hope that now you gain some knowledge about those important economic stuff. So thank you guys for listening to me. I will talk with you very, very soon. And cheers and bye for now.